Hello, my name is Doug Reynolds. I'm a realtor in Sacramento, California. I work for Prudential California Realty, and this is my monthly video update. I talk about the statistics in Sacramento County area and also what's going on in the real estate market in the area. So this is my video update for the end of April and the beginning of May 2010. So I've got about 3 key points I want to talk about today. First thing, talking about the statistics in Sacramento County. Next, talking about the tax credit. And thirdly, talking about the HAFA short sale program. So let's get right into it. First off, talking about the statistics for Sacramento County. We saw the typical spring season, shopping season for homes just went into full effect for March. We had the winter slump was January and February. Huge increase in sales for the March statistics. We had a 41% jump in sales, so almost double the amount of sales in March compared to February. I expect that to continue through the spring and into the summer. Probably going to have a large volume of sales. So along with the sales, the inventory went down. We've been talking about this for months and months. The inventory is only at 2.2 months worth. So as in the past, I've referenced that 6 months worth of inventory. That's about a normal flat market. Anything below is a seller's market. Anything above would be a buyer's market. So we're well below that 6 months. So like I've been saying before, in the lower end, $300,000 and below around Sacramento, it's a very strong seller's market. And along with that volume of sales, the median price went up a little bit too. It went up from about $180,000 to $182,000 is now our median price. So we bottomed out in about February 2009, around 165,000, give or take a little bit. And we've been coming up and bouncing around as I've been explaining over the last months for you. So now on to the tax credits. I've been telling you every month about the federal tax credit. That's coming to an end here in April. There's only a couple of weeks left. Remember, you have to have an accepted offer by the end of April, and then you have to close escrow by the end of June. So that's coming to an end. I've talked extensively about that. You can review my past blog stuff for the details on that and how that works. But now, very nice timing, California has come out with their own state homebuyer tax credit. And the way this works is it's starting May 1st. As long as you close escrow, after May 1st, this has to do with when you close. The federal had to do with when you had an accepted offer. This has to do with when you close. So it starts May 1st. It goes through the end of the year. It's broken up into 2 different groups here. They've set aside $100 million for first-time home buyers. And so that's anyone, we've talked about that, hasn't owned a house in the last 3 years, and they're going to be moving into it as their primary residence. They're going to be living there. There's going to be $100 million available. So this is a first-come, first-served basis. When that money's gone, it's gone. So there's $100 million available for first-time home buyers, and the way it works is you're eligible up to $10,000 as your tax credit, and it gets broken out into the 3 years after you purchase. You can get $3,333 tax credit for each of the next 3 years. So it's kind of broken up there, but it equals up to that $10,000. There's another $100 million that's split for buyers buying new homes. So ones that have been built and have never been lived in before. And you don't have to be a first-time home buyer for that one. It just has to be, you're going to be your primary residence, you're moving into it, so it could be your second home, your 5th home, your 20th home, whatever. As long as you're moving into it, that's available. And then there's other guidelines and everything. You can check my past blog posts in terms of the other guidelines. There's purchase price factors in how much you're able to qualify for, income limits, stuff like that. But it's a first come first serve, so I don't think the money, it's probably going to run out in the first couple of months here. It starts in May, June, July, August. Probably around August or September, we might be hearing that the funds are starting to be gone there. So good timing. If you're going to miss out on the federal, you've got a state one coming into play now where you can still get possibly up to $10,000 tax credit if you're a first-time home buyer, or if you're buying a brand new home that's never been occupied before. So that's a great thing with the state to help keep us going. We've bottomed out here, and it's good to help us keep going. So last point, I want to talk about what's called the HAFA program. You're probably starting to hear about this. It's HAFA, H-A-F-A. Stands for Home Affordable Foreclosure Alternative. It's a government program. Okay, the Obama administration came out with this program. It just started April 5th. Okay? It's an optional program. Lenders can choose whether or not they want to, opt in to this HAFA program, but the government is really pushing the big banks to follow these guidelines. They're pushing the big ones. Wells Fargo, Chase, B of A, all the big guys, they're pushing them. So we're expecting to see the large majority of the lenders to go with this HAFA program. So let's talk about how it works. And this is for distressed owners of houses that are worried about getting foreclosed on. This is their alternative to foreclosures. So first step is you have to try for the loan modification, and that's under the HAMP program. Home Affordable Modification Program, okay? So you go to your lender, you say, either I'm behind in my payments or I'm just about to be behind in my payments. You have to have, you have to have a hardship, whether it be lost your job or you're getting cut back on your hours, you're being forced to transfer for your work, anything like that. Also, if you had God forbid, a horrible medical accident or something, these huge bills, you have to have a financial hardship, okay? You submit financial documents, whether it be your tax returns, pay stubs, bank statements, all that good stuff. Submit that, and then your lender looks over everything, and they decide whether they're going to agree to modify the terms of your loan, and basically your payments would be lower and you'd be able to stay in your home. If you don't qualify for that, it kicks over into the HAFA and it goes over to the short sales. So if you don't qualify for the loan modification, it goes over to the short sale HAFA program. Basically the way that works is the property has to be your principal residence, has to be your purchase money loan on the property. You couldn't have refinanced it, half a dozen times and, bought a bunch of cars and boats and trips and stuff. And you have to be delinquent on your payments, or it's clearly obvious you're going to be delinquent real soon because, you've just lost your job or something like that. Okay? So here's the process. They tried to do the loan modification for you. It didn't work out. They've already got all your financial information. And you say, okay, I want to do a short sale. I don't want to get foreclosed on. They're going to review everything. They're going to say, all right, we need this much money in the sale of your house, okay? So they're actually kind of pre-approving you for a short sale here. You're saying you need to get this much money for the home. List the property. So if you want me to help out, I can. Obviously, I've been listing short sales. I've been telling you guys that for a long time. You can call me up, say, hey, Doug, I need to list my house as a short sale. I'm trying to go through the HAFA program. We need to get this much money. We'll list the property. We'll get a buyer in there. We'll get an offer. We'll accept it. We'll send it on over to the bank. Say, all right, here's your offer. And they're supposed to look at it and actually get a decision, an approval decision back to you within 10 business days. So granted, this program just started. Unfortunately, I don't think they're quite that ready yet, but that's the goal. So this is a really streamlining process here for these short sales, trying to get them basically pre-approved, quick decisions, hopefully no longer waiting 4 or 5 months for these short sales to go through.